Business Review, a daily program that delves into the latest and most significant economic stories. From stock markets to currency news, Business Review covers the most up-to-date stories in the global financial world.
Wall Street indexes climbed on May 7th following a clutch of upbeat earnings reports led by PayPal as investors looked past more weak jobs data caused by the coronavirus-induced economic downturn. Energy, materials and financials, which have lagged this year, led the way among S&P 500 sectors. Shares of PayPal Holdings soared and boosted the S&P 500 and the Nasdaq after the company said it expects a strong recovery in payments volumes in the second quarter as social distancing drives more people to shop online. Shares of media company Viacom CBS Incorporated, a ride-hailing firm Lyft, also jumped after their earnings as a first quarter reporting season that Refinitiv estimates will show a 12% decline in earnings begins to wind down. Stocks have rebounded sharply since late March from the coronavirus-fueled sell-off, helped by a massive monetary and fiscal stimulus. Investors are now watching efforts by a number of states to spark their economies by easing restrictions put in place to fight the outbreak. The Dow Jones Industrial Average rose 211.25 points, or 0.89%, to 23,875.89. The S&P 500 gained 32.77 points, or 1.15%, to 2,881.19, and the Nasdaq Composite added 125.28 points, or 1.41%, to 8,979.66. Data showed millions more Americans sought unemployment benefits last week, suggesting layoffs broadened from consumer-facing industries to other segments of the economy and could remain elevated even as many parts of the country start to reopen.
Robots taking over the world is the stuff of sci-fi movies and television shows like Westworld, Terminator, and Blade Runner. But with the current coronavirus outbreak, robots are becoming more accepted and widespread in society and business. The pandemic has accelerated that trend, with robots are interacting with COVID-19 patients, cleaning supermarkets and transport, and delivering goods. Author Martin Ford, who's written various books on the arrival of robots, including Rise of the Robots, Technology and the Threat of a Jobless Future, says the outbreak has brought forward the timeline he envisioned of robots becoming a permanent part of the workforce. He said the pandemic has really totally turned the calculation on its head, and now all of a sudden there's actually some danger or risk associated with interacting with people, so anything that's fully automated, I think particularly when you're dealing with issues of hygiene, preparing food and things like that, if you can keep people out of the loop, it's actually suddenly become not a disadvantage, but an advantage. He added it may go on for so long that it actually shifts consumer preferences to some extent, that some of these changes become permanent, and that once again will kind of accelerate the movement towards automation. Ford has spent over a decade talking to some of the most prominent scientists in both robotics and AI to achieve his vision of the future, but he believes now is the time to address the issue of robots and artificial intelligence in society. Since the outbreak, governments around the world use technology like temperature sensing cameras at airports or social distancing apps, which many argue infringe people's privacy. Ford said the main message there is going to be trade-offs, and there will have to be a discussion or at least some kind of understanding with the public where people decide what is the most important to them and are they willing to sacrifice privacy for security.
The Bank of England said Britain could be headed for its biggest economic slump in over 300 years due to the coronavirus lockdown, and kept the door open for more stimulus next month, in what it called an illustrative scenario rather than a standard forecast. The BOE said Britain's economy might be on course to shrink by 24% in the 3 months to June, and unemployment could more than double to 9% of the workforce. In 2020 as a whole, output risked shrinking by 14%, the biggest plunge since the Great Frost in 1709, despite the huge stimulus provided so far by the BOE's rock-bottom interest rate and mammoth bond buying program, as well as the government's £100 billion emergency budget measures. The central bank's scenario did, however, include a sharp economic bounce back in 2021, with growth of 15% if lockdown restrictions are loosened over the coming months. The BOE acknowledged there were risks that its scenario could prove too optimistic because people might remain cautious about resuming their normal lives after the lockdown. The governor of the Bank of England, Andrew Bailey, said it is quite a sharp recovery of economic activity, but we've also factored in that people will be cautious of their own choices, as it were. So we've got some further recovery thereafter, as people sort of, in a sense, are cautious. They don't re-engage fully, so it's really not until next summer. Thereafter, that activity comes fully back. Striking a less gloomy tone than many economists, Bailey said the BOE expected the recovery of the economy to happen over time, though much more rapidly than the pullback from the global financial crisis. Officials have suggested a gradual move towards reopening businesses, while ministers say that firms operating outdoors might be able to find a way to function in the summer months. The BOE estimated an extra 2 weeks of lockdown would cost about 1.25% of GDP in the short term and raise unemployment by 0.75 percentage points, though the longer-term impact would be near zero. The BOE also said banks were in a much better position to support households and businesses than during the global financial crisis. Some forecasters doubt Britain will bounce back as quickly as the BOE assumes.
China's domestic travel and consumption has rebounded during the Labor Day holiday, sending out a signal the economy is on track for a fast recovery. According to a commentary published by China Global Television Network, China's domestic tourism has witnessed a surge during Labor Day holiday after the Spring Festival travel season was interrupted by COVID-19 outbreak. The 5-day public holiday recorded 115 million domestic trips, reaping over 47.5 billion yuan, or some $6.8 billion in revenue. Even though the revenue is about 40% of the number recorded a year ago, it's the result of tourist sites reopening only 30% of their total capacity. Retail sales also picked up during the period in Wuhan, the epicenter of the outbreak. Sales revenue in several major malls returned to the level before the outbreak. Consumption has been leading force in China's driving growth for the economy, with the May Day rebounding reflecting the resilience and potential of the economy. In the meantime, the resumption of production is also accelerating across the country. Purchasing Managers Index, or the PMI, stood above 50 in March and April, representing an expansion in activity. Katie Huberty, head of equity research for North American technology hardware at Morgan Stanley, said technology vendors are encouraged by the pace at which China's production has ramped up post-COVID-19 shock, and this has reinforced their belief in relocating the production of their high-volume products to the country. This provides reassurance China will remain a large base for manufacturing. As a nation that has been contributing to around 30% to global growth for years, China is speeding up its resumption of production across the industrial chain, which has injected momentum into the world economy.
Business Review, your daily source for the most critical stories in the financial world. Tune in next time for the latest financial news impacting the world economy.